What's up, folks? Nice morning update. Sorry, last few days I've been out of pocket. We haven't done much. Tight range, tight range, tight range, tight range, tight range. So, if you look at, that's 30 points, just about 30 points, just about 30 points. So each daily here has been 30 points. And the overnight, as we have, is 25 points. So, yesterday I was looking at 75 kind of as the over-under. Obviously, this 90-93 level is going to be important. Actually, 90-95. You could almost say 91-95. So I would say above 95, I'm going to look at the bullish side and look at a peak at the highs. Probably below this 70-75 area, I'd be bearish. I don't know. A lot of singles to clean up. And if you think, 23 pretty much cleans up all these from the other day. You still have down to 98. So 80 is going to be a huge level. Or 90 is going to be a big level, followed by 80. But I'd be watching 90 and then followed by 80. If we were to get down there, we'd still have to get through this, 2025. So we'll see. Downside, really, I'm looking at 23. If we were to drop down. But we could park at 37, 40, 44. So these singles become targets to me. So ideally would be a drop to 23 and then bounce. Or we dip down just before it and come back up into that 50 area. I don't know. It's all this consolidation is tough really to get levels. But 50s has recently been pretty good. 74 is your pivot. We are below my magic line of 72, and we've been kind of hugging that recently, where before we've been quite above it. So we'll see if that has anything. R1 is 86. That's a decent level. O2, 14. Okay. 50, 58. Okay. 46 and 50, 30. These pivots are okay. So we'll see if any of those hold. I don't know. I'm kind of at a loss right now. Here's the bull flag. Everyone's talking about, right? You're going to come down and then it's going to rally up. Again, I can see it. I don't know if it'll transpire. I don't think that any market structure will change until probably May, April, May. I think this next month of March is going to be more of the same. I don't have any indication of anything that's going to change. Here's your monthly POC is done at 72.5. So you do have some spike volume at 23 and 44 and 77. So we'll see. That's the monthly. Here's your weekly, right? So we dipped and we've pretty much gone straight up. 51, 66, 70 is still my upside target. We're fairly close to that, and we could see that soon. All-time high is only about 40 away. So it's kind of where we're at here. Huge cash gap, 88 or 38 to 81. That's a double because there's another one in here. So I would assume on an SPX level, 50.39, they're going to defend. So this could be a good level to bounce if they adopt it today after all the craziness. So Euro, I want another test of that 50, but this is starting to look like we're going to come back down. Apple's a little lower, Nvidia's so we'll see here. But 830 is the CPI, personal consumption expenditure, PCEs at 945 or 830. Sorry, both of those are at 830, and then Chicago PMI is at 945. So we've got numbers till 945. I'd stay out, and then a bunch of Fed speakers. So we'll see. This could go either way, but as of now, we're down 14. Typically what they're going to do is they're going to take us down and then, rally it up. But if the numbers are bad, I think we could go down. So we'll take this one by ear. I haven't had a lot of confidence or good feeling about this market for a while. It's been tough to read for me, so I'm trading very lightly and picking my spots. This isn't the market structure I enjoy. So we will see. Again, I don't think this market structure changes for a while. a lot of zero DTE talk as well. So these funds have been, not funds, but you know, larger size traders have figured out that they can sell, you know, nickels elsewhere, basically what we call as a cab, or teenies. So they're just collecting daily on the SPX upside and downside puts, you know. So either they're doing the same thing we are, essentially. We're taking a lot of meat and taking it off. They're just doing the teenies and letting them expire. So at some point, and I'm not saying it's today or tomorrow or whatever, at some point we run the risk of having a crazy blow up zero DTE. These guys are so comfortable and they're selling in such size because this market just won't go down. And so why wouldn't they? So there is risk there at some point that we get a catalyst and we get too far in and these guys blow up and you get a gnarly like 2 or 3 year limit down day. That of course will all be blamed on the zero DTE guys and whatever. The only reason they're not harping on it now is because the zero DTE guys are selling puts and it's all bullish, and so it's just kind of holding the market up and crushing VIX. And this is the structure we've seen since October. So again, I don't see that changing in at least this next month. April and May is when I'm looking at a market structure change, and I don't know what the catalyst will be, but at some point this will change, and this should loosen up and free up VIX. But VIX has been crushed at any point. It's been tough for us, although we've been doing well. This is just the market structure now. So anyway, I will be in the room all day today, and then obviously tomorrow as well. Sorry about the gap of videos, and have a great day.